What did you want to be when you grew up?
I was going to go into foreign affairs. I wanted to travel the world, meet interesting people, go to great parties in exotic places. I was a real people person, and I was accepted to go into DFAT, Department of Foreign Affairs and Trade, after university. I took a year out because it was going to be a few more years in Canberra of training, and travelled around Australia, and ended up in Sydney for the last 5 months of my gap year, because that's when my boyfriend was, and he worked in financial services. He was a OTC bond broker. And rather than work a breakfast shift at a hotel or something like that, he ended up getting me, he told me to come and meet him at the pub one night, and he'd get me a job as a futures broker, which I had no idea what it was. And on the Thursday night, I showed up at the pub, and by 10 o'clock, I had a job starting on Monday morning. I had to be there at 8 a.m. And the company was called All States Futures. It's one of the floor members of the Sydney Futures Exchange. It was a pretty exciting first day, John, because it was Monday the 19th of October 1987. Black Monday, in Australia, Black Tuesday very much so, because we're ahead of time. The flow on from the big storm here in London on the Thursday night, when people couldn't get in to open the floors in the markets on the Fridays, the sell-off started here in London, and it certainly cascaded to our markets when we opened first the next day in Asia. And we all know what happened after that. So I didn't think I'd have a long career, because people were making redundancies and things like that. But actually on the futures side, we were busier than ever. And markets were moving through one big figure at a time in the day. It was incredibly exciting. I knew so little. It was probably what saved me and saved my job. And I loved it. So I ended up not going back to DFAT, and I stayed in futures markets ever since. I think I was one of only 5 women on the floor back then.
How did overnight screen trading with SYCOM influence the market?
So Australia's always been a great adopter of new technology, whether it was mobile phones or indeed electronic markets. So we had what SYCOM stands for, the Sydney Computerised Overnight Market. An early iteration of that went live between 1981 and 1983. So we ran night markets for the Australian marketplace, and there was also quite a strong flow of business from offshore into our markets. The Soros Funds, for instance, a lot of the big hedge funds, or what became hedge funds later on, all traded in the Sydney markets for us, and the electronic markets were a means to do that. It wasn't masses of volume, but it was enough to keep it going. You'd see it all happening sort of around after the close of the day and when the opening happened. We also had this unique situation where the markets closed for an hour and a half in the middle of the day. So futures markets shut from 12:30 to 2 every day. So the over-the-counter markets tended to shut too, and everyone went to lunch. That continued until we went 100% electronic at the end of 1999. ASX closed the floor in 1989, first stock market in the world to do so, and we ramped up the electronic trading, and we had pretty much 5.5 days by 23 hours operating by the mid-90s. Technology was always a really big part of futures in Australia, certainly at State Bank of New South Wales, which I took over as trading floor manager in 1994. We implemented the first homegrown ISV, as they then became called. They were just called front ends back then. Computershare had developed it. We were a shareholder, and we swapped out some shareholding in return for a whole front end trading system. I think it cost $1 million back then. And all of us had access to it, all my traders and brokers, and I spent a lot of time upskilling the team, because we could see that the transition was coming sort of from about 97 onwards, that we were probably going to go all electronic. As much as we all loved the floor and didn't want it to shut, the ability to transact more, to do more volume. And we were the broker for First State Fund Managers, which was the largest fund in Australia at the time, probably still is. So it was really important that we were able to get the flow and volume through at a good price. So we were highly technically efficient, along with technical analysis, but also had the open outcry in all the pits across the floor.
How did you get State Bank into retail futures trading?
Retail's always been a strong part of markets, and in Australia, in equity markets, they represent about 52% of volume done back then. When all our big banks and telcos were privatised, everyone ended up owning shares in these entities. So naturally, Australians started to look at trading and investing more, and futures was the next step. So not many of the banks were in retail back then, and we built one from scratch with State Bank. State Bank was one of the largest retail banks in Australia. All the government employees in the state of New South Wales, which is the largest state, had their accounts at the bank. That's how it worked. So it made sense for us to be able to do that. It also made sense to enable farmers, for instance, which were a very large part of our population, to be able to hedge their wool crops or their grain crops more efficiently. So having a strong retail business enabled that. And we grew from 0 to about 800 customers quite quickly in about a year, with a really, really strong education program around it. We were fairly picky. We weren't going after swing traders. We really were going after those that were looking to invest and trade in the markets and use it for real hedging purposes. But it was a very different time. We had the largest superannuation fund or pension fund in the Southern Hemisphere. First State Fund Managers was part of our bank group. And then we had this strong retail business, and then all the institutional flow that came from our bank from their day-to-day hedging of their repo books and swaps books. So a really fun job, good time to be in markets.
How did the transition to electronic trading go?
It was a challenging time, and I think anyone who went through those times would have felt the same, no matter what country you were sitting in. Those jobs on the floor, it's an intense working environment. Your word really is your bond. You have to have really strong conflict resolution skills. You've got to be able to pick yourself up quickly on the back of an error and be back in trading and filling the orders for the clients. It's a very different environment on screens. That was all upstairs on the desk. But I did find that it was easier to hire more women in that environment than the open-outcry floors. It didn't suit everybody, that environment. We could see the closure of the floor coming, not that we all wanted it to happen, but it made sense to be able to expand the volume that could be transacted daily, and the electronic system was certainly doing that. We made a conscious effort as a team to all upskill ourselves across the board on all the electronic trading systems, including the new platform that was going to go live. And there was a staged approach in Sydney. We put the SPY contract, the share price index contract, went first, quite some months before everything else, so that we could test it out, make sure that everyone was ready for it. And, there were glitches, there always is, but by the time the really big interest rate products were ready to move, and they're, systemically very important products for the economy, for the government, and for those that hedge and trade in it. And it also gave the locals time to make that transition to electronic trading as well. We have a really strong local market down there, and to enable them to transition to proprietary trading, all electronic, having access to the screens, etc. That was, it was quite a big project to do. So we upskilled ourselves, and I'm really pleased, that our whole team managed to transition to the new world order of all electronic trading, and all of them went off to have great jobs later on in the markets in all different ways. So it was a good success story for us, but I'm not sure it was the same for everybody.
What was it like to build the first all-electronic market?
Technology was happening. We just described that transition floor to screen that we had in Australia, and elsewhere we were seeing electronic markets in the overnight market and floors still operating the day in some products. Once we successfully transitioned upstairs to screens, our bank got bought by Commonwealth Bank. We'd merged with Colonial, which was a big insurance company, become a bigger entity, and then Commonwealth Bank, one of the big four in Australia, bought us. And that was when I had to make a critical career choice. Do I go into the even bigger bank and stay in futures, or do I go and do another job and sort of carve out another career? At that point, there was the exchange staff and those of us that were on the other side of the market. I had an opportunity after conversations to join a brand new startup exchange from scratch. So it's called the Australian Derivatives Exchange. It was funded by some of the banks, a lot of the large locals. The whole premise of it was to improve pricing of the products, improve the structure of some of the products, and extend the product suite of Australian denominated products. So we were using the Euronext platform. We had the first proper international ISV came down, Easy Screen, to link up to it. It was the first time in Australia. We listed the MSCI Australia Index that had never been listed before anywhere in the world. Collaborate with MSCI in that. And instead of listing 3-year and 10-year bonds, which was the typical duration for futures in Australia, we mirrored the US and had 2-year, 5-year and 10-year bonds. The exchange launched. It was successful in launching. We built some open interest, but there was a lot of politics around it. You know, obviously the Sydney Futures Exchange didn't welcome a new exchange. We partnered with the ASX and were clearing into the ASX clearinghouse. So really strong partnerships across the world on this. And we got a new markets license that had to be approved by the federal government, by the Treasurer. In the end, it didn't survive through a technicality around cash in bank on one day, and the market was shut down. Open interest was wound down. I learned a lot from it. It was an incredibly new paradigm for markets, because offshore we'd seen markets that had open outcry running some electronic, which we were already doing at the SFE. This was the first time that a brand new market was built wholly electronically from scratch, fit for purpose for the people that came together to fund it. And from there I knew I couldn't really go back into futures in Australia. I really wanted to do more of this with the technology overseas, and I made my way to London and was here for 18 years and carved out a career here then in futures, primarily more on the exchange side.